Assalamu alaikum friends. So welcome to question number 8. As you can see, you have been given the extracts of the statement of profit or loss of three companies. Okay. Sometimes you might be given three companies, not two. Okay. Sometimes both of them might be subsidiaries. Sometimes both of them might be one might be a subsidiary, one might be associate. It's like that. Okay. So sales of shares in Bokum and Serum. So this is like a disposal of a company, two companies, right? So let us read the information. You can even start reading by requirements, right? I normally start by reading requirements, but since we know that it is like a group question, so we know the types of question that could be asked, right? It might be something to do with consolidated profit and loss financial statements, goodwill, NCI, right? Let's see. Sale of shares in Bokum on 1st of May 2007. Ashanti acquired 70% of equity interest of Bokum Property Limited Company. 70% means it's a subsidiary. Fair value of identifiable net assets. So identifiable net assets they will give you. The reason why they give you all this is to calculate goodwill. Okay. And share capital and retained earnings. So this is the share capital. This is the retained earnings, 85 million. Okay. And other components of equity. So this is sometimes we have other components of equity also, and it's not always given. At the date of all these are at the date of acquisition. Okay. Excess of fair value identified net asset acquisition is due to an increase in value of the plant which is depreciated on a straight line basis and has a 5-year remaining life at the date of acquisition. Depreciation is charged to the cost of sales. Where is depreciation charged? You should know where an item is charged. This will help you to make the changes if you have to make in that place only in the cost of sales. And this identifiable net asset you have to further increase. That means adjustment has to be there because there's a depreciation relating to value of a plant and which is depreciated on a straight line basis and is for 5 year, right? I hope I'm not going too fast. The reason is because the answer, if I go slow, right, the video might go up to 2 hours also. So, and definitely you must have read this question before. So, I don't think this should be a problem if I go a little bit fast in the questions. Okay, when I'm going through the case study, I mean, Ashanti disposed 10%. So, from 70, he has disposed 10%. Okay, that means still it's a subsidiary because from 70 to 60, it didn't fall below the threshold of 50%, so it is still a subsidiary. Okay, now the NCI up. Okay. So what is the NCI of on 30th April 2009. Okay, for and for a cash consideration. So here they didn't give the fair value like normally how they give. Okay, for the cash consideration of 34 million carrying amount of the net assets. Okay, so the net assets at that date, the date of disposal is 210 million before any adjustments on consolidation. Okay, no adjustment has been made on consolidation. Definitely some adjustments has to be made to the on consolidation on net assets and it will change. Goodwill arising on the acquisition. So definitely goodwill will arise when you have acquired the 70%. Okay, so goodwill was 44 million but had been reduced in value by 20% before the sale of the equity interest to NCI. Okay, NCI means to the NCI, the non-controlling interest, right? The minority shareholder, you are selling it, the 10%. Before, when you have acquired 70%, NCI was 30%. Now, when you have disposed the 10%, NCI increased by another 10%. Okay, your shareholding it went down from 70 to 10%. NCI increased from 20 to 30%. So, sorry, 30 to 40%. Okay, so that's why they have to, because that means in other words, NCI is getting it from you. NCI is buying it from you, right? That's why. So goodwill is 44 million, but and it reduced in value 20%. All this happened before the sale. Okay. Next, sale of share in Serum. This is another company. Okay. So he acquired 80%. How much? 80%. If you don't remember these figures and all, no issue. Because in the exam, multiple times you can go through the case study, multiple times you can go through the requirements. It is in front of you. The requirements and case studies in front of you on one side of the screen, and your response where you have to type your answer is on the other side of the screen. So both together you can see. Okay, but here the issue with me is I have to keep on going up and down, and I have to keep on revisiting the question. I have to exactly go through the case study from where I got the figure when I explain the answer. That's why a little time is wasted there, but don't worry because it is CB platform. Good news is both are there. So parallelly you can do both. Okay, you don't have to keep turning pages like how we used to do when it was a paper based exam. So that's a good thing, isn't it? Sale of shares in Serum. So here you have acquired 80%. Again a subsidiary. On which date? 1st of May. See, dates are very important. Okay, never mess around with the dates. Whatever question it could be. It could be relating to accusation. It could be relating to your tax. It could be related to your anything. Anything. Date is very important because it's not always the year end that we assume. Sometimes they might tell us to do in the date of the accusation also. Sometimes they might tell to do the. It depends on the requirement, right? The date in the requirement, if you see, they mention the date. That's why dates are very important. Now the purchase consideration. Okay, so you have acquired this, and the purchase consideration is in cash, 95.2 million. So net assets. By now you know. Okay, all these things. At least three things they will give. NCI, identifiable net assets, purchase consideration. Okay, fair value, and also the profit and loss account and the statement of financial position. These things will come. So net assets is 115 million. NCI had a fair value, and NCI fair value is 26 million on that day. At that date, that means date of accusation. Okay, on 1st of November 2008, this is okay. Uh, so on 1st of November 2008, disposed 50%, some 80 to 50%. That means he's left with 30%. Now he's no more a subsidiary. He's no more a subsidiary. He's an associate. That you have to understand. Okay, so disposed how many? 50%. For how much? 90 million. And here the net assets is 160 and NCI is 35 million at the date of disposal. Okay, you should know two things. Okay, whenever disposal happens after the purchase, you have to know the fair value at the date of the purchase, as well as you have to know the fair value at the date of the disposal also. It's very important that you know these two things. The remaining of equity interest, and always whenever a sale has happened, okay, taken place after a purchase, whatever is remain, if you are not selling completely, something you are retaining, right? That retained portion needs to be fair valued. Okay, that fair value also you need to value that also. That is your associate. So the remaining is 45 million. Okay, after the disposal, Bokum can still exert significant influence. The reason why they give significant influence, okay, why the reason why they say this means it's an associate, because associate from 20 to 50%, okay, who holds significant influence. Goodwill has been impairment tested and no impairment has occurred. No impairment. Good thing. Claims total profit for the year ended. So this is their total profit for the year ended. Please check the date. Date is very important when they give profit and statement of financial position, because sometimes when the disposal is in between the year, you have to time a portion. Okay, the whole year it's not associate, the whole year is not a subsidiary. Maybe part of the year they are subsidiary, then you have to consolidate, and other part of the time they are associate. So you don't consolidate, you only take the share of the associate's profit. Okay, so Serum's total profit for the year ended 30th April 2009 was 14 million, and it can be assumed to have occurred evenly. Okay. Now there are some additional transactions. After that, we are heading on towards the requirement. Okay. Ashanti sold inventory to both Ashanti. He's the parent. Sold inventory to both the subsidiary in October 2008. So Ashanti sold inventory to this and this in October 2008. The dates, I always highlight the dates. Next, the sale price of the inventory was 10 million. Sale price of inventory. See, this is an intra-group sales. If you can see this picture, okay, 10 million, because from parent to subsidiary, or one subsidiary to another subsidiary of the same parent, these are all intra-group transfer which has to be eliminated on consolidation. Please understand this, okay? For 10 million and 5 million. Why for 10 and 5? 10 is for Bokum, 5 is for Serum. Two companies are there. That's why sale price for inventory for both they have given. 10 million is for Bokum, 5 is for Serum. Ashanti sell goods at a gross profit margin. So what is it? Gross profit margin is 20% of the two group companies. At the year end, half of the inventory sold. At the year end, half of the inventory sold to Bokum. That is the first subsidiary remain unsold. But the entire inventory sold to Keram had been sold to third parties. That means no good is there with Serum. But for Bokum, there are some goods which are remaining unsold. Okay. At the year end, Ashanti sold goods on credit to Spice. So Spice is another unrelated company. Okay. Sold goods. Sold goods on credit to Spy and recognized revenue of 5 million. So this is something to do with your revenue, right? But do me so quick. There might be some more standards into it. After the day, before the date of the sale, customer had made an announcement that it would restructure his debt. Okay, announcement was made. Wait, announcement was made that it would restructure its debt. This is something to do with provision, IS 37, restructuring and all when you do. Okay, at the date of the sale, it was deemed improbable. Okay, at the date of the sale, it was deemed improbable that Ashanti would recover the amounts outstanding, that it would recover the amounts outstanding. Okay, so now we have highlighted the whole case study, all the important things. Now let us go to the requirements. Okay, so first let's explain with suitable calculations. Even the second one is explained with if you see question number, go through question number 7. What I have done. Okay, that is the previous question to this. This is it. Same question, same pattern. Even the wordings are requirement. The wordings are same. So now you can see how much they test this area over and over again. Explain with suitable calculations. Explain with suitable calculations. Okay, so you have to explain, but the whole thing is not calculations. You need the help of calculations, but you have to explain. Okay, that means explanation part is more compared to calculation is only little, half of the mark is for calculation only. Okay, the other half is for, or maybe more than half is for discussion. So explain with suitable calculation how Ashanti should deal with the sale of the, so how they will deal with the sale of, this is relating to the sale of the first subsidiary. Okay, you can even annotate it or write it somewhere. Sale of Bokum in the consolidated financial statement. Definitely, when you sell, see, this is a group accounting question, right? We have been told that question 1 in SBR is related to group accounting for 30 marks. So we all know consolidation only. Okay, so consolidated financial investments statements, how it will be dealt. Second is how the sale in serum. Okay, this is really the second subsidiary when you are selling, how this will be dealt, and also the remaining investment in the consolidated statement of profit or loss. Just see in the first, they are asking when you are selling the first subsidiary in the consolidated financial statements, but for the second subsidiary it is in the consolidated statement of profit or loss. Okay, in short you need both, but for two different companies. What is the third requirement under part A? Taking into account all of the information presented, calculate the revenue and cost of sales figure that would have been the consolidated. Yes, we know that revenue and cost of sales will go in the consolidated statement of profit or loss, so you have to calculate it. Okay, you have to calculate this two figure. Your answer should include an explanation of the correct treatment of Ashanti sale to spice. Also an explanation of uh, correct treatment of Ashanti's sales to spice. That is the unrelated group. For 9 marks. 9 marks. Okay. Next. Part B. Okay. So part B is this the last part. And this whole paragraph is relating to part B only. Okay. So can we read it? But I think it's better to read the requirements first, right? Isn't it? Discuss whether the proposed share purchase will lead to Ashanti obtaining control overnight. So here, what they have done, they have proposed the share purchase. But when they are purchasing the share, will it lead to obtaining control also overnight? Night is the company. Discuss. Okay, the question asked discuss. Let us see. And it's for 7 marks. So the debtors of Ashanti are considering acquiring how much? Just see, it's not even 50%. 49.9% they have considered acquiring of the equity shares of Knight. The next bigger shareholders will be Knight's two original founders who will hold 20 and 21 and 80% of equity shares respectively. So the two original founders, they will hold 40, 21 and 8. Okay, the original founders are not related. They are not related. The remaining 21.1% of the shares will be held by 11 shares. So this remaining, this shareholder, uh, this remaining will be held by 11 shareholders who are acquaintances of the original founders but whom have a remote relationship to one another. Okay. There has not been a complete owner representation at the last 3 annual general meetings of Knight. Ashanti will have the ability to appoint 4 of the 6 members. This is very important. Who has the power? Does they have the voting right? Okay, their representation in the board of meetings. So he will have the ability to appoint 4 of the 6 members of Knight's board of directors, the board, which is a very important piece of information. This tells how much influence they have over the Knight's board. The board of directors has overall responsibility for the entity's operations. Okay, so they have the board has the overall responsibility for decisions that affect the entity's operation. Okay, now, So what's next? First, we'll finish with part A when we are selling the two subsidiary and also calculate revenue and cost of sales, and then we'll go to part B. Okay. So let us see how it needs to be started. Before that, let us go through the key answer tips. So from this first part of A and second part, where we are discussing the two sale of two subsidiaries, require you to explain the treatment of the share sales. Easy marks are available for your discussion. Do not jump straight into calculations or you will miss this. Okay. First, you need to explain the treatment also. Don't just jump to calculations. Second, present workings very clearly. You have to label your workings using proper subheadings, what each working is for, with the number. You can still score highly even if you get the wrong answer. You see, for workings, you will get most of the marks for workings. Even if your final answer is wrong, only 1 mark you will lose. But for the rest, let's say a question is for 7 marks, 6 marks is for working, only that 1 mark is for the final answer. Okay. So your focus should be towards doing as much working clearly labeled as possible more than getting the right answer or trying to perfect your answer. It is not possible even in the exam condition. Somewhere or the other you will make mistake. If it was not the case, everyone would be scoring 100 out of 100, right? In ACC, I don't think anyone has ever achieved that score, at least not in P levels. So you can understand that perfection is not what it matters. It matters that how many marks you are able to collect. Maybe not full, but at least not so less also. Okay. So if you don't know how to deal with a specific number or a transaction, then leave it out for guess. There is no negative marking. No negative marking. Leave it for at the end. If you're not able to solve anything in the time given, leave it, go to the next question. I would say, see, not even in the time given. You read the question, and if you feel confident that you can do it, you are getting the answer, you know it is there in the imagination that this is how I'm going to answer, will be my working, will be in this page, then this will be my answer, then this is how I'm going to write. I'm going to take it, write this answer in 5 different paragraphs. Okay. If you have a plan like this, then there is no problem in it. You can go ahead. But for those students who is not even having that idea in mind, not getting any points, forgot everything, then don't waste even 1 second. If you're reading question not getting anything, move ahead and go to the next question. Why? That time what you have saved, rather than not doing that question, later you can use it, utilize it. Okay. So don't wait and think for, let's say a question is for 10 marks. Okay. 10 into 1.18 minutes you have to spend. So don't waste your 18 minutes sitting on that question thinking. If you're not able to write it, don't waste those 18 minutes. Go to the next question, do it, do everything else. At the end you can always come back and do that question. You will get you will have some time left also towards the end. Okay. Just because it is 18 minutes, don't stick to that 18 minutes and then think, okay, I will spend 18 minutes thinking. If I don't get it, I will go to the next question. So that's so stupid. Don't waste time. Either you're confident, either you don't know. It's two way. Either you know it, either you don't know it. If you are not sure halfway also, if you're not sure, but you have something like you are 50-50, still I will say attempt it. Even if you're 50-50, attempt it. It's better to attempt. If you're fully confident, no problem. You can go ahead. If you're 50-50, there's a chance that I'm 50% right or wrong. Still go ahead with it. Do it. Later you can come and change some figure here and there because it is CB platform. Very easy to erase now. Delete and write again. Not like paper where you have to cut and cut every time and do it again. And if you're not sure at all, 0%, no chance, not getting any answer, don't waste even 1 second. Go to the next question. This is the technique which I have used up to date today, and it and and I've always got positive results, right? I've always got positive results. I have always managed, right? To be honest with you, I've always managed to complete my paper before the time given, before the 3 hour, 15 minutes gets over. In 3 hour or sometimes even less than that, I finish my whole paper. And I actually get time to check my paper. I'm not kidding, right? So you have to be very, very strict with your time while planning also, not on the day of the exam. It will not work. If you are taking to write an 20 minutes question, you are taking 30-40 minutes while you're practicing. So don't think at the day of the exam you will perfect yourself and then you will write it. It does not happen that way. While you are practicing, you should inbuild that time management in you from day one. First question you are doing, you have to keep time. Even if your answer is totally wrong, does not matter, but keep your eye on the clock. At least the time management, learn it, if not the answer. It is more hard to manage your time than getting the right. See, most of the students, most 95% students fail ACCA not because of wrong answers or lack of knowledge, because of time management. They know the answer, but they are not able to manage the time between so many requirements. Okay, so make sure that you are not into that group. Okay, so it's not able to manage time. Now on, so now let us return to the question without wasting so much of time. Sale of shares in Bokum. So clearly they have labeled. Okay, you need to write it clearly. You need to type it. It is relating to Bohem company. Okay. So when dealing with the sale of shares in a subsidiary company, it is vital to establish whether or not the parent has lost control. Very important is this, whether the parent still has the control after disposal or they still have the control. This you have to establish. Okay, you have to tell. So first paragraph, what does it say? That it says that only. First paragraph, first line should be that only, whether they have established control or not. Lost control or not, I'm sorry. So Ashanti, okay, you are directly linking to the case study. You're not saying this is a subsidiary's definition you are giving, then you are giving the selling. After sell, it became an associate. The definition of associate is like this. This is not the way to answer, my dear friends. If you're thinking like that, it's wrong. So see the answer here. How they have defined, they have clearly told Ashanti's sale of shares in Bokum does, okay, please mention the name of the company. I have been telling this thousands of times, I think, by now until now. Ashanti's sale of shares in Bokum does not lead to a loss of control. It is not a loss of control. Okay, so because it is not a loss of control, go to the second line. The first point is, let me label it for you. Whenever you get a question like this, where first you have acquired, then you're selling off. First point, loss of control. I can highlight it for you. Loss of control, first word. It does not matter how the way you arrange the sentence, it is up to you. But loss of control, this three words has to be there for you to get marks. Otherwise, you're going to lose 1 mark. Okay, I will show you the marking scheme at the end of the video after all the questions are attempted. Next thing, consequently, there is no gain or loss to the group arising on this transaction, and goodwill is not recalculated. Two things. What is it? Okay, maybe I will highlight it for you. No gain or loss. Goodwill is not recalculated. So this number 2 point, always write the second and third. Second is no gain or loss. No loss of control means no gain or loss. Why? Because it's still, it is a subsidiary only. You're not selling it to someone. If you lose control, only gain or loss comes. Okay, remember this always. When there is no loss of control from subsidiary to subsidiary, but that's just the shareholder reduced. Okay, it's like the shareholders are changing hands. Before, it's like you're selling the shares to the NCI. How much was your NCI? Before, you were holding 70% and NCI was 30%. Now, because you have sold the 10%, that means NCI is the one who's buying that 10% from you. So it's just the shareholders are changing their hands. That's it. There is no actual transaction that has taken place. So, therefore, no gain or loss. Number 3, goodwill is not recalculated. Why? Goodwill is only calculated when you initially acquired a subsidiary. Remember that always. Second time when you dispose, I know it's a subsidiary still, but second time you don't calculate goodwill. Only initially. So no, goodwill is not recalculated. Goodwill will not be recalculated what you have calculated in the beginning when you have acquired the 70%. Only once. Number 3. Okay. And instead the transaction is accounted for within equity. Fourth point. So I think now you can break down the paragraph into points, right? But don't write in bullet points and don't write in words. One or two words. It needs to be proper sentence. Okay. So this transaction is within equity. This transaction is within equity. As it will increase this one. Okay. You see, increase in NIC. Before they have 70%, NIC is 30%. Now they have disposed 10%. That means they have 60%, NIC increased to 40%. NIC will increase by 10%. Major shareholder will fall by 10%. Okay. So NIC increase, that's why it is within equity only. Okay. So it is, this one is number 4. Within equity. Why within equity? Because increase in NCI. Write that there's an increase from 30 to 40%. That's why it is within equity. Okay, fourth point. Okay, now next. So NCI in equity will be increased by how much? Definitely you need NCI. NCI is there. So you need to calculate NCI. Because the requirement asked you with supporting calculations. Explain. So what are the supporting calculation means? What are the figures you need? Okay. So the figures you need, one of it is, what is it? NCI. NCI. That's why they have calculated NCI. Okay, and this will mean equity only. How much? NCI will increase. Definitely it will increase. Because we told that 30 to 40%. But it will increase by how much? $25.1 million. Million. It is shown in working one. Like this, you have to label. Right next to it, you are writing working number 1. That means when I go to working number 1, I should be able to know how I got 25.1. Okay. Next. And one thing which you should not do, presentation matters a lot. I always tell, don't do calculation, then write something, then do calculation, then write something. No. Put all your writings in one, either top or down, and calculation, all your calculation together in one side. Okay. Now it is CB platform. Simultaneously, you can do both. You calculate somewhere, you start writing. You calculate somewhere. You can calculate in Excel, you can write in Word. You can calculate Excel and keep the figure, and you can copy paste in the Word. Life has become very easy for you people. So take this opportunity, right? The best of your advantage. Next, the proceed received from the sale exit the increase by the proceed received from the sale exit the increase in NCI by 8.9 million. Working again in working one, we'll see in working one. No worry. If you're not understanding the sentences, we'll see in the working one. But this sentences needs to be written. You have to write it in Word. Calculation is not enough to show that NCI increased by 25.1 because the question asked explain. So explain. And so other components of equity will be increased by this amount. Even other components of equity. Okay. We know that there's a separate section for other components of equity. Even this will be increased. By which amount? By this the same amount only. Okay. So now comes the calculation. We'll see. So control to control calculation. You see they're using subheading. Working one. This is called labeling of your working. And they are writing $million also. Now they are showing doing the calculation. What is it? You are finding the change in NCI. Okay. To find the change in NCI, please note that this is the pro forma. Learn this pro forma. You can even by heart it also. First is the proceed, then carrying amount. Okay. You add the sorry, not add, you deduct the net assets and the goodwill from the proceeds. That's how you get the change in goodwill. Okay. So proceeds is 34 million. Okay. It is 34 written, 34 means 34 million. You read it as 34 million. Let us go to the proceeds. You have sold that one for 34 million. Yes. Let me highlight it from the thing. 34 million. Okay. Now let us go to the net assets. For net assets, there is a separate working too. So we'll leave net assets for time being. Let us go to the goodwill. Goodwill is 80% of 44 million. Already goodwill has been calculated. You just have to take 80%. Why 80%? Why 80%? Okay, think. Okay. Why it is 80%? Till then, let me take you to the goodwill. Because goodwill was 44 million, right? But they reduced in value by 80%. So sorry, 20% it reduced by value. So after reduction, what is left is 80% only. That's why 80% of 44 million is the goodwill. No impairment is there, right? So 80% of 44 is the goodwill. Next, add both the net assets and the goodwill, which is this one. Okay. And out of this, you have to take change in NCI. How much you change? See, not the actual figure of NCI, not before, not after. How much is the change, the difference between before and after? We just told that NCI increased from 30 to 40%. So that means it increased by 10%. That's why we are applying the change in NCI. Only 10%. Only 10%, not 30%, not 40%. On this 251.2. Then we are getting 25.1 here, and that change in NCI we are adding with the proceed. And that's how we get the increase in OCE. What is OCE? Other components of equity. OCI stands for other components of equity. Please note it. So change in NCI, and this one you deduct. Okay, you don't add. I'm sorry. Change in NCI you deduct from the proceeds of share disposal. So you sold it for 34. Your NCI increased by 25.1. So the difference is 8.9. Okay, and this will go in the other components of equity because it is relating to NCI. No, it is not the share capital which increased or does not come in the retained earnings. It will go in the other components of equity in the statement of financial position, right? 8.9. So this is your increase in OCI. That's what they have told here, 8.9, and that's what they have told here also. NCI. So equity will increase by 25.1 and also Here they showed, right? Here they have wrote proceed receive from the sale exit the increase in NCI. You see increase in NCI is 25.1, but proceed is more than that. That's why there's an increase in OCE, which is 8.9. Otherwise it would be a decrease. Remember that there could be a decrease in OCE also, but in this case it is an increase. Okay, so that's why in other components of equity will be increased by this amount. Which amount? 8.9. So whatever you are doing in the calculation, you are just explaining in the sentence. That's it. Now let us go down. Next is net assets, because to find this 216 we need net assets working to. So to find out, and this is pro forma when you want to find net assets where you have been given information relating to acquisition date and the reporting date, please use this method. Okay, this method is only used when you are given information like this. When directly you are not given the fair value of net assets. Okay, if you see the previous question, you have been already given the fair value of net assets. Maybe one or two adjustments you have to do in that fair value, increase or decrease. In this case, no fair value has been given to you of net assets. You have to find each of it, add together, and then find the difference, and that is the net assets. That's how you're going to calculate the net assets. So work into is net assets. Okay, make 3 columns. First is description, second is acquisition date, third is reporting date. 2 columns. This 2 columns has to be there. Acquisition date, reporting date. Again in dollar million, starting with equity shares, retained earnings, other components of equity. Okay, and we have some adjustments. What is it? Fair value of FBA relating to plant. Okay, this is a balancing figure if you see. Okay, and depreciation. Depreciation also will be there. Okay, one by one we'll go, one item at a time. Okay, because I'm not in a hurry and I don't want you to rush through all this. This is very important things which needs to be done calmly and with patience. You cannot hurry. Start with equity share 55. How do you get the equity share 55? Right? It has been clearly mentioned. Where? Are you given the statement of financial position? No, you are not given the statement of financial position. In this condition, it is given to you. What is it? Let me highlight it for you. It is 55 million. This 55 million is the share capital of Bokum. Okay, the subsidiary is not the parent. You are taking the share capital of the subsidiary. Remember, and the retained earnings is 85 million. And other component is 10 million at the date of acquisition. Okay, so let us go here. So if you see here, so we are over with this. Okay, equity shares 55, retained earnings 85, other component equity 10. Okay, so this 10, and by the way, depreciation will not come in the acquisition date. Can we have depreciation? No, depreciation date comes when? At the reporting date. We don't calculate depreciation on the day when we acquire it, right? So depreciation will not come in the acquisition date. That's why it's on the reporting date. And 160. So this 160, maybe it has been given to you. That's how they got the balancing figure of the plant. But let us go to the question first to understand that. Yes, it has been given. So sorry, not serum. We have been looking for Bokum, right? So Bokum, if you see, yes, fair value of identifiable net assets. It is one. Sorry, I have cut it out. It is supposed to be highlighted. It is 160 million. You see, fair value of identifiable net assets at the date. That means at the date of acquisition has already been given to you 160 million. So that balance is for, if you see here, the excess of the fair value. I think you can follow me. See the 1, 2, 3, 4. The excess of the fair value of the identifiable net assets at the date of the acquisition due to an increase in the value of the plant. They didn't say how much it has increased. That's why it's a balancing figure. But there is an increase. Okay, that excess is the fair value. Okay, that because of the identifiable net assets. That's why when you add 55 plus 85 plus 10 and 160 has already been given to you. So the balance is 160. This is the fair value increase in plant. Okay, coming to the reporting date. Okay, so reporting date, what happens? Equity share and retained earnings and other component equity, all the three you are adding. Is it so? That's what it shows, that you are adding. But if you add all the three, you are getting 150. But here it is 210. How it is 210? We have to go to the Bokum. Okay. So here they have already given you. What is it? The amount of the net asset of Bokum at 30th April 2009 was 210 million. It is 210 million amount of net assets at 30th April 2009. That means at the reporting date, 210 million is the value of the net asset. But before any adjustments on consolidation, that means if there is any adjustments which is on consolidation, it's not taken into account. Before that, it is 210. Okay, so that's why you're not taking everything. Okay, so you're not adding the three. Okay, the arrow they are showing is that if you add the 3, it should add up to 210. They have already given in the figure, so it's 210. Okay, next. So this 10 is not taken there. Okay, that's why the same fair value plant on the reporting date also it will be there. That 10, as you have taken in the accusation date. Okay, this will be same. It will not be added with the fair value of net assets which has been given, because they told before adjusting for on consolidation. So on consolidation, what comes? This fair value on plant. That's why we are not adjusting it. Next, it comes depreciation. Depreciation on the reporting date will always be deducted, not on the acquisition date. How much is the depreciation? Okay, so depreciation, what did they say? It's a straight line basis, and depreciation they told is for 5 years. Okay, and what is the value of the plant? And it is on 1st of May 2007 if you have taken it, and you are giving it on 30th April 2009 after 2 years. Okay, so the reporting period is after 2 years from the date of acquisition. Okay, so when you're calculating depreciation, 10, because this is the fair value plant, right? On this you are taking depreciation. So 10 divided by 5, because 5 year divided by useful life into 2 years, because from 2007 to 2009, 2 year. So 4, it is to be deducted, and this 160 and 260. So what will be your net asset? It is this 216 is your net asset. Okay, or the reporting date, what is your net asset? It is 216, hence 216 here. Okay, so now let us go to the second item. We are done with the first part of it, the sell of Bokum. Now we are going to the next company. Okay, we found the change in NCI also. We found the net asset also based on this column wise, and then what else did we do? Yeah, that's it. And it's for how many marks? Let me see the number of marks. It's for 6 marks. So definitely working might not be so much, but for definitely the second subsidiary working is more, because one is the marks are higher, 8 marks, and also two things is there. First, when you are selling, the second thing, it's a sale of a subsidiary is losing control, and also remaining investment you have to value. That's an associate. That's why more things are there for you to do in second part. That's why it's more marks. So start with the column sale of shares in Kerem. If control over country is lost, then a profit or loss must be calculated. Before earlier, first part, no profit or loss. This is profit and loss has to be calculated. Okay, because it is a control. Control is lost. Control loss means profit or loss. It's a disposal. So take time to memorize the pro forma for calculating this profit or loss. Take time to memorize the pro forma. This shows how important pro forma is. Now let us go. Same way how we have done for the previous company, we are doing for this company also. We are first explaining and then the calculations. Okay. So here also, first sentence we are saying whether they have lost control or not. Definitely they have lost control. So we have to say that how much control they have and for how many months. So Ashanti controls Serum for the first 6 months of the year, and so will consolidate only for 6 months of his revenue and cost. Revenue and cost always have to be time apportioned. Okay, when it was a subsidiary, only that much of the period you can take it as subsidiary and consolidate. Okay, so 6 months. He control. So first 6 months consolidate of revenues and cost. Okay, next midway through the Ashanti lost control. So midway, midway lost control. Who lost control? Ashanti lost control over the company. At this point, it is de-recognized at this point from the consolidated statement of financial position. And what happens? What is the next thing after you de-recognize from there? Second thing is a loss or a profit, and loss profit goes where? consolidated statement of profit or loss. So second is gain or loss will arise and it goes to consolidated statement of profit or loss. So how many things are there? Can I label? First, number one, that it has control for 6 months and 6 months of revenues and costs. Second point, lost control. Third, derecognize. Okay, derecognize. Fourth, gain or loss. You have to calculate. Four things. Now, how it is calculated as follows. Okay, how do you do that? So this is the pro forma that you have to learn. Don't forget to discuss the treatment of the remaining shares. Okay, so this is the pro forma. This is the not able to. This is the pro forma that you have to know. Remember, okay? If you want to calculate a profit on disposal, especially when you're setting up a subsidiary and you're losing control. So make sure that you know step by step this order only. First proceed, then fair value of residual holding, the balance you are holding. With that, you deduct net assets at disposal plus goodwill minus NC at disposal. Okay? Everything at the date of disposal only. Okay? If you see, this is at the if you see this is at disposal date, this is at disposal, at disposal, at disposal, everything is at disposal, even the proceed is at disposal. Okay, so there's no confusion for you which one should I take. It is at the date of disposal. If something is given previously and you have been given the closing figure, that means you have to adjust. Okay, reevaluate. So now let us start with the proceed. They have clearly told that second subsidiary, which is what is the name of the company? Serum. You have sold it for 90 million. Therefore 90 million. Next, fair value of residual holding. How much it is the fair value for the remaining shares? It is 45 million. We have to go to this paragraph, sale of shares in Serum, right? They told the remaining is 45 million. I've already underlined it for you. So this you have to add with the proceed of 90. Okay, even the proceed is 90. In case you forgot, I can show you. Cash consideration of 90 you have okay disposed of for this. Then we have net assets at acquisition, net assets at disposal. Okay, what is the net assets at disposal? And for goodwill, calculating working again, goodwill at disposal. Why? See, we told that goodwill is not needed. Only initially we are acquiring. When we acquire, we calculate, but that is for the first one. We didn't lose control over this. Here we are losing control. So that's why when we are losing control, what should we do? We are de-recognizing the goodwill which we have calculated initially, right? When we acquire, there's a goodwill. So that goodwill needs to be de-recognized now. Why? Because we are selling it and we are losing control. So that goodwill at the date of the disposal also you have to calculate that goodwill. That's why we are calculating goodwill at the date of disposal to de-recognize it. And NCI also at disposal we need. So what is the net assets at disposal? Let us go to that. It is given as 160 million, right? So in case, so this 160 net net assets at 160. Okay, and fair value of NCI is 35 million. So already they have given you the fair value of NCI of 35 million. Okay, and so only thing is goodwill you have to calculate. And after you deduct this, okay, keep these things in the first column like this. And bring the total of this 160 plus 6.2 minus 35 outside and then deduct this from here and then get the profit 3.8 on disposal. Okay, but how did you get that goodwill at disposal 6.2? We have to check down. Okay, here if you see how it is labeled, clearly it is labeled working 3 and goodwill calculation. Like this you have to label. Okay, before we go to the next paragraph, the previous paragraph, they're talking about the remaining interest. Before that, let us finish the goodwill calculation and finish it off, right? Then we can talk about the remaining part so that you don't get confused. So starting here also same template. Okay, you start with dollar million, then consider, see, remember the formula for goodwill. Okay, then you know quickly you can do. It is consideration plus fair value of NCI minus fair value of net assets at acquisition. Okay, so how much is the consideration? 95.2. Fair value of NCI at acquisition 26. Is it so? At acquisition. Okay, NCI at acquisition here is not disposal. Please don't take at the date of disposal. Goodwill is at the accusation you calculate goodwill. So NCI is at accusation, net assets is at accusation, even the consideration is at accusation. Okay. Even if you have to de-recognize it at the date of disposal, but calculation of goodwill has been done previously, no? So that goodwill you need. So 95.2 plus 26. Let us see from the case study. Okay. So if you see here, where's the goodwill? Yes, here. This is the cash consideration, 95.2. Then coming to the goodwill. So NCI is 26 million. And what is the fair value of net assets? It is 160. Already we have done previously. Fair value of uh, it is 160, no? Yes. It is sorry, that 160 is at the date of disposal. We need at the date of accusation. At the date of accusation, it is 115. Okay, the net assets. We'll see how. Okay. So 115, 115. Yes, it is this 115. Okay. See, definitely, if you see the order by now, when an information is presented, it is always presented in a chronological order. Chronological order means it according to the date they present. In any exam you take, I have seen this pattern, which is a good thing for students. So quickly they can see uh, that first paragraph is relating to accusation dates. Later on, it will be relating to the fair value of the other part relating to disposal. Because accusation happened first, so accusation details they will give in the beginning, disposal happen later, it will come in the second paragraph or third paragraph, it come later. So this helps you to quickly identify at the place that from here I'm going to get the date from here. So this helps a lot. Okay, this is also a quick it's like a tip. Okay, to be quick, it's like a tip hint for you, the students, those who struggle to get extract information from the case study is a very good skill. It's a great skill you have to master it. If you are very quick in finding the right information for your requirements from the case study, let me tell you, no one can stop you from passing this paper. Trust me, I guarantee you that you are going to pass this paper. This is a great skill, especially in SBL. Other paper it is there, but SBL it is heavily used, heavily, because so many exhibits are there, and your questions are set in such a way that you need the help of those extracts, those exhibits. So SBL has been designed like that. So even the other paper also, any paper you need the help of case study. Without that you cannot, and you will have to be able to pick up the numbers from the case study, a relevant number, and you have to be very quick. You cannot keep on struggling and reading and searching where is the fair value of NCI, where is the net assets. You cannot waste time like this. Okay, so according to the dates only, if something has happened beginning, right, that will be presented in the first paragraph or second paragraph also, it might come. If it's something is happening in the middle, then it will be in the middle. If something is happening at the last, so according to the date they present the information in the case study also, which is a good thing for you. Okay, so I think this piece of information shall help you a lot. Tell this, inform this to your other friends also today. Okay, now that you know it, right, you might be knowing it before, but if you don't know it, if you're not aware of it now, if you're coming to know it, please make others also aware of it. Okay, and this can be applied in any paper, not just SBR. Please don't limit this to SBR only. Any ACCA paper is designed in that way. Okay, so 115, and then we get the the goodwill, which is 6.2. Now we are done with that also. Oh no, one thing is left, the remaining part, no? Yeah, so the remaining 30. See, this is what happens when you're too quick to go to the next one, right? I will tell you something. When you are doing a question, be on that question. Your focus, you have to be physically, mentally in that question. You should not think about what you have done in the past, even in the exam also. This is exam technique I'm telling you, so that you don't panic and don't do silly mistakes. The mistake what most of the students do, they try to rush through. They want to finish one after the other. The moment they're in that question, they think about the next question or the previous question if it has gone bad. So don't be like that. Once you are in a new question, forget about what you have done previously. Don't even think about the next question, what is going to come. Okay, be on that question only and think about that question only. Just think, these are the things I have finished. Now what else is remaining for me to write about it? So think, okay? Don't try to finish quickly before the time. Finishing too early and finishing too late is not good time management. If you finish too early also is not good. That means you're not writing too less for the marks. Okay? This is also a risk. Most of the students follow this technique only. To manage time, they'll write less and they try to fill the paper, not writing appropriate answers. Okay? So don't do that. Okay, now remaining, how much is remaining? 30% interest, right? 30%. So the remaining 30% interest. Because they have 80 and they have sold 50%. So remaining is 30, no? After they sold 50%. So the remaining 30% gives Ashanti significant influence. Please mention this. So therefore from this date, he's an associate. Wait. Seramin is an associate from that date. And it is not enough to say that it is an associate. It is accounted using what method? Equity method. And you also have to say the consolidated statement of profit or loss will report profit. So in the profit or loss, consolidated profit or loss, you report profit from associates, 2.1 million. How 2.1 million? 30% is for associate, 6 months, because 6 months you have consolidated. That means the other 6 months is associate, and 14 million because for profit is 14 million total profit. Okay, let me take you to the case study now and show you it. Somewhere they have given you the total profit also, right? It is the last paragraph. You see last line, 14 million is the profit for the year. For the year ended. So you have to take 6 months of it. Now we'll calculate the number of months, which we didn't do it before, which we should have done it before, but we didn't do it. So when did you acquire it? 1st of May 2007. When did you sell it? 1st of November 2008. So May, June, July, August, September, October, 6 months. 6 months only. 1st of November, November is not counted. November whole month, after that onwards is an associate. So 6 months subsidiary, 6 months associate. Okay. So you don't consolidate, you use equity method. That means you're only taking the associate share of profit. Okay. Share of associates profit. That is 2.1 million. In the consolidated statement of profit or loss. You take the figure in the consolidated statement of profit or loss, but only what? Only the profit from associate. Not you don't consolidate line by line how we do for subsidiary. Okay, sales, cost, no. Only that as profit you take from the associate. The consolidated statement of profit or loss. Okay. So with that we have finished this also. Now we are going to the third one where we have to calculate the revenue and the cost of sales. And if you let me see the number of marks first of all. It is for 9 marks. 9 marks. So lot of things is there. Calculate, explain, calculate, explain. Okay, so now coming to the third, and here also if you see it is clearly labeled revenue and cost of sales. Two things you are calculating. Okay, so separate out the two things. The key to pass and score high marks when you are given a piece of info, when you are given too many of calculations, okay, and when you are given 2-3 things together, when you have to calculate, break it down into two, this and this, so that how many marks was it for? I don't remember the number of marks. Let me see. Again, I forgot. It's for 9 marks. So this 9 marks is totally not just for one thing. Okay, so you can break down. Maybe this might be for 5 marks, this might be for 4 marks, or this might be for 4, this might be 5. So break it down equally between the two things, okay, or 3 things or 4 things. How many things they give? And then work one by one. Break down into small piece of information. Work, deal with each of it separately. This is the best strategy. You cannot deal together at once. So now we are first, forget about cost of sales. Now we are working with the revenue, okay, and you are going to consolidate, okay, because this is consolidated statement of profit or loss. Okay, in that account how much revenue and cost of sales will go. So revenue, you need revenue. Don't forget, just because it is related to serum, don't forget about Bokum. They have talked about Bokum also, okay, because this also will go in the consolidated statement. Even serum also will go in the consolidated profit or loss, but only for 6 months. Only for 6 months. Intra group, you see, intra group, if anything is between this three, eliminate it. That's why it is deducted. Sale to spice is also deducted, but we have separate workings for each. We'll go through each working. First, it is Ashanti. The parent company's revenue 810 million. So let us go to the parent company's revenue. It has been given already, profit and this thing. So this is 810. We are taking this. Okay, Ashanti's 235 from Bokum. Okay, so we can take Bokum also 235 completely. We can take Bokum 230. Even though they have sold, they have the control. Here also we can take full. But coming to Serum, 6 months of 142. Okay, that is the sale of Serum, which is 142. Uh, out of this 142 only 6 months. Okay, because they have been subsidiary only for the first 6 months. The remaining 6 months you cannot consolidate. So 6 months, and then intra-group working 5 and working 6 for sale to Spice. 15 and 5 you deducted, and hence you get revenue 1096. Coming to the cost of sales, you see the consistency. This shall help you. Now second thing is cost of sales. Okay, for each of this item, the line by line you are giving, for each of them you are getting marks. This is how you are getting rewarded 9 marks. So cost of sales. Cost of sales, so Ashanti you will take 686. Boham you will take the full amount. Coming to Serum, all the 6 months you will take from the cost of sales. Okay. Depreciation. Cost of sales, you remember depreciation has been included in cost of sales, right? So that's why depreciation also will come here, and separate working is there, and it is in order. They are not saying, they are not presenting working 5 then working 1 then working 2. No, it is presented in such an order that working 1 item is presented first, then working 2, then working 3, like that, right? 1 2 3 4, like that. Intergroup, here also we have intergroup, it will be eliminated. Unrealized profit is also here. You see unrealized profit, we have some stocks which has not remained unsold in one of the subsidiary. That's why unrealized profit comes, and unrealized profit we have to add it. Okay, and for that we are working 5. Both are in same working. Okay, and for depreciation a separate working. Depreciation is added, by the way. Okay, because it is cost of sales, so depreciation is also a cost. It will be added, it will increase your cost more and more. So unrealized profit is added because unrealized profit is also a cost. Well, sorry, this unrealized profit also will increase your cost. But intra-group is eliminated. Okay, in the revenue also, in the cost of sales also. And if you see the intra-group, in both it is 15 and 15. Revenue also it is 15, working 5, and even in the cost of sales it is 15, working 5. Okay, so now let us start in the order only. That means when you present, what should come first? Working 1, right? Don't write working 1 somewhere else and then 2 is somewhere after 3 4 5. No, 1 2 3 4 5 6, in that order you are writing the working. That order only you are going to write it in the main table also. Working 4 is for depreciation. So before intra group and unrealized profit, you will first write depreciation because it is working 4, then working 5, then working 6, like that. Depreciation. So the fair value adjustment relating to Bokum's plant. This is about Bokum, the first subsidiary. Please don't forget the subsidiary. There are 2 subsidiaries. One is Bokum, one is Serum. So remember, for Bokum we had a fair value adjustment of 10, right? Clearly they have told. In working 2 you can go back and check. We have just come from there, so I'm not going to go through it again. We know how 10 million we have got. That was the balancing figure which we got for the net assets. Okay, working 2. Whenever we have a working under a working, for example under working 4 we have another working 2, so refer it like this. Okay, no need to explain everything how we got 10 million and do the calculation again and waste time. No, you don't duplicate your work. Once you have done the working somewhere and you need that information in some other place, don't repeat your workings. Just refer like this: working 2, working 3. It is understood. So 1 year's worth of depreciation must be charged in the consolidated statement of. How many years of depreciation are you going to charge? Only 1 year's depreciation. Okay, in the statement of profit or loss, and this amounts to 2 million because 10 million divided by 5. But there we took for 2 years and we deducted at the reporting date when we were calculating the net assets. Remember, 10 divided by 5 into 4 million. But no, in the profit and loss only 1 years, so 10 divided by 5 year because useful life was 5 years, so 2. Now that means you debit cost of sales because cost of sales is an expense. It needs to be debited by 2 million because in the cost of sales only depreciation is recorded. Credit property, plant and equipment 2 million because from property, plant and equipment only this depreciation will be deducted. It is relating to this a plant. Okay, that's why credit PPE. Coming to the next working, which is intra-group trading. Please put a label like this. You see, one word only, intragroup trading. Let us see what is the tutorial note says. Most consolidated profit and loss questions involve intragroup trading. You see, most of them. Very hardly you will see where it is not here. Okay, intragroup trading is there. That is to check your intragroup trading rules. Okay, so make sure that you're happy with the required adjustments because they are source of, these are the source of easy marks. Even in the financial reporting, you have been doing this. So in the SBR, this should be nothing for you. Okay, coming to that, Ashanti has sold goods to both Bokum and Serum. We know that. So group revenue and cost of sales will need to be reduced by 15 million. You see the group revenue, you have to refer it as a group, and the cost of sales both needs to be reduced by 15 million. How? 10 plus 5. Revenue will reduce because there's no more revenue within the group. Even the cost of sales is not a cost of sales within the group. So both there will be no cost of sales, there will be no revenue. That's why it is deduct if it is included like that. And 5 by 15 million. How? 10 plus 5. So how are you going to reduce it or eliminate it? Revenue normally we write it on the credit side, but to cancel it off, you write it in the debit side. That's why debit revenue 15 million. Next, cost of sales we write on the debit, but to cancel we have to write on the credit side. Therefore, credit cost of sales 15 million. Okay. Now we'll see how 10 and 5. It is under additional transactions. Okay, so they have told that the sale price was 10 and 5 million. You see, sold inventory at 10 and 5. So sold inventory at 10 and 5 means one place it will be revenue, the other place it will be for one of the subsidiary from one subsidiary's point of view, or maybe let's say parent has sold, right? So from Ashanti's point of view, it's a revenue, those 10 and 5 because he has sold. But for the subsidiary who have received that inventory, Bokum and Serum, for them it's a cost of sales because they have spent 10 and 5 million to get that inventory from the parent company. So for one party, for the parent it is revenue, for the subsidiary it is a cost of sales. That's okay. You can understand, right? From the both the side we are saying. That's why revenue 15, cost of sales 15. 10 plus 5. You are adding both the sale price of both the subsidiaries 10 and 5. Okay, this 10 and this 5 million. So what is it? Debit. And an adjustment is required to remove the unrealized profit within a group inventory as a result of the sale of the Bokum. So as a result of the sale to Bokum, what should you do? You have to remove this unrealized profit within the group inventory. It should not be there in the group inventory. It has to be deducted, removed in the unrealized profit. Because you haven't made that profit, it's unrealized. You didn't sell. You still have some inventory left with you. So you cannot realize that profit. It is not realized yet. It has to be removed from the inventory. Okay. So the unrealized profit you have to calculate URP. Okay, there's a separate section also which deals with this unrealized profit. It's 1 million. How? This is the working. 10 million to 20% half because the total half remain unsold. That means half you have sold. Okay, and gross profit margin on 10 million. Why 10 million? Because you are only taking the sale which is to the Bokum or Bochem, whatever it is, the way you want to pronounce it. The first subsidiary, second subsidiary, that 5 we are not taking. Okay, because that completely it is adjusted, completely sold off. But for Bokum, 50% is unremaining means 50% he have sold. So half of 10 million because 10 million is what they have sold and 20% of it because gross profit margin is 20%. Okay, let us go back. Let us go back to the case study. You see, it is in the first paragraph. Second paragraph talks about the credit to spice. That is coming later on. But first, let's finish relating to this one. So 20% is the 20% is the gross profit margin. Okay, that's why we take 20%, and half of the inventory sold remain unsold. So that means half is there. The only the things which you have sold to the third party can be calculated as profit or loss. Okay, not within itself. Within itself, it is intragroup transfer deducted. Therefore, 1 million. So how do you take it out from the inventory? Inventory is debit, right? But you credit. You need to credit the inventory, and cost of sales you need to debit 1 million. It will be added there in the cost of sales. Okay. This will increase your cost of sales. Next item is sales to spice. Okay. Then we have part B. Part B is fully theory. Let us go to sales to spice, working 6. Okay. Because specifically they told how you are going to deal with this. Okay. So if you go up, working 6, you are not taking the cost of sales, neither you are, but you are taking it in the revenue. Okay. Revenue you are taking 5, you are deducting from revenue. Okay. Sale to spice. We'll see how. So IFRS 15. So if there's a sell means what? IFRS 15, because the revenue has been calculated. So IFRS 15 is the standard. Contract with customer says that a contract with a customer should only be accounted for if. How can you account for the contract with the customer? Only if it meets these conditions. What are the 5 things? These 5 things has to be met. From the text, this is pure textbook knowledge. So I don't even have to keep on explaining. Quickly, I will just read the contents and go on. Parties have approved the contract. Both parties have approved the contract. Rights and obligations can be identified. From the contract, you can see what are the rights and obligations of each party. Payment terms can be identified. How much they are entitled to receive or how much they have to pay. Fourth, contract has a commercial substance. Yes. All these are explained in IFRS 15 in detail. Okay. So you can check my video on IFRS 15. The contract has commercial substance. Fifth, last one. All the conditions has to be met for it to be recognized as a revenue. Fifth, probable that the seller will collect the consideration they are entitled to. Yes, the seller is going to receive whatever in the contract, the contract price says that this is how much they are going to receive once they have delivered the goods or the service. Okay, so based on the information available, now you are linking this with the case study, whether it meets these 5 criteria or not. So based on the information available, it would seem that the final criterion was not met. So out of this 5, the final was not met. It was not probable that the seller will collect the consideration. Because one of it did not meet, therefore, by the way, remember all 5 conditions has to be met. It's an and, not or, not any one of it. No. If you don't meet any one of it, if you meet the other 4, it's a sale. It's not like that. All the 5 has to be met. If any one of it has not been met, then it's not recognized as revenue. That's it. Simple. So therefore the contract cannot be accounted for and no revenue should have been recognized. That's why we have deducted. Remember, 5 million we have deducted from revenue because you cannot recognize the revenue. No revenue should be recognized because contract cannot be accounted for. So the revenue recognized by already Ashanti has recognized the revenue. Now you have to change it, reverse it. So it must be reversed. Reverse means if something is debit, you credit. If something is credit, you debit. Okay. Revenue has been credited, now you debit revenue 5 million. And receivable has been debited, now you credit receivable 5 million. Okay, cancelling the revenue. But let us go back to that paragraph and see the 5 conditions, whether the previous 5 conditions has been met or not. Okay, it is the last paragraph under additional transactions. Because I told you the way they give you the requirements, that is the same way they will present you the case study in that order. So it's easy. So I know the last paragraph is relating to the spice because part B separate paragraph they have given here. Okay, so the last part is for the last part of A. So they have told that recognize revenue 5 million. So you see it is probable 5 million they are going to receive. Okay, and customer had made an announcement that it would restructure his debts. So we know, you see at the date of the sale, it it would deemed improbable that Ashanti would recover the amounts outstanding. That means they are not probable that they will receive this amount. That's why the 5th condition was not met. But other conditions, let us go through the other 4 conditions and see whether it's met or not before we go to the last requirement. Parties have approved the contract, yes. Rights and obligations, yes, we know. Payment terms, yes. 5 million. Contract has commercial substance, yes. It has a commercial substance, right? And it is probable seller will collect the consideration. No, they told it is improbable that they are going to receive it. So last condition is not met, therefore not revenue should not be recognized. And if it is recognized, reverse the revenue. That's it. Now coming to part B. Okay. So part B, I think we have read. So it is about the control we need to talk about. What should we talk about? Whether they have the control or not overnight. 49.9 they have acquired and all those things. Okay. So now that is control. Okay. How do you start this? Look at the what is given to you in the box. This is like a hint for you. They give you what are the things, what are the key things, and how do you start. So they told start by stating the definition of control. This is how you start. Has found in IFRS 10. It's in your textbook. You can go through IFRS 10 or you can see the videos also IFRS 10. Statements are there. Definition is given there. So according to that definition, you give the definition of control. Apply this definition to the scenario and reach an explicit. After that, you have to reach an explicit conclusion also. Whether Ashanti will assume control overnight or not. Okay, so here you just cannot say because it is less than 50%, therefore it does not have control. No, you have to read the other facts also. According to IFRS 10, you have to tell. Okay, so another thing, a very good thing I want to bring out here also is this question. If you read part B, just look at just go through the case study of part B. Did anywhere they have mentioned what is the standard that you have to apply? Anywhere they have mentioned, not even in the requirements, not even in the case study, they will not do so. The question asked whether the share purchase will lead to control overnight or not. So how do you know it is IFRS 10? That is my question. How do you know which standard? IFRS 10. How do you identify it? By going through this case study and the requirement question. Because this is very important, okay? If you are able to figure out that this question, this is their standard, this question, this is the IFRS, this question, this is the IS, that means you are going correct. You are going in the right direction only. This is only you need in the SBR. Suppose you must have misinterpreted or interpreted a question wrongly and you might think some other standard, right? Some of you might give because the word says share purchase, some of you might go to IFRS 2 and start talking about share based payment and all those things, you see. So that's why I told you it's very easy to misinterpret the question and give wrong standards. Number two things you have to see. Two things will tell you which standard. Number one, look at the facts. If it is if it is IFRS 2 share based payment, you need information. What are the information? Vesting condition, share options. The word will include items like share options. They are given to the employees. They will give the number of employees and they will give you the number of service they need to do. You know, this is the fair value. This is the day the option was granted. It is exercisable over 2 years, 3 years. Such information will be given to you to identify that it is IFRS 2. But such information in this case study it is not given to you. The word emphasizes on one thing: control, obtaining control, whether they will obtain control or not. So by looking at this word, it tells me which standard, because control is defined in which standard? IFRS 10. IFRS 10 only IFRS 10. No other standard says what is control. So that's where I am very clear that I know this is the standard I'm going to use, IFRS 10. Understood? Don't worry, I'm going to do all the questions. So one by one, I'm going to tell you how to identify the standards. Okay, so this is one standard. Sometimes directly, sometimes there are standards which are indirectly linked to it. Directly, you cannot get it. For example, you have been given goodwill. So we definitely know it is something to do with goodwill, something to do with consolidation and all. Right? IFRS 3. But inside that, you might have to deal with IS 36, which talks about impairment of assets. So goodwill is an asset, right? So you have to, if there is an impairment of goodwill, we have to use IS 36. So you see, some standards are not very apparent. It is not very clear, not direct. Indirectly also, small standards are linked sometimes. But in this question, it is only one standard, IFRS 10. Clearly, no other standard. Okay. So now, What is left is to answer. Okay, you have to answer, that's it. Exactly, copy paste from the textbook. No changes there. So definitely it's not possible for you to write word by word. You will be writing this in your own words. Okay, but make sure the points you are writing matches with their points, even though your sentences might be different. So according to IFRS 10, so standard, please be very clear which standard you are using IFRS 10. Okay, it talks about consolidated financial statements, correct, as investor controls and investee. So this talks about investor controls and investee. If the investor has these three things, investor should have. What is it? Power over the investee, exposure or rights to variable returns from its involvement with the investee. Third, ability to use his power over the investor to affect the amount of the investor's return. They should have the power over the return. They should have power over the investee. Exposure to rights of variable returns to the with the involvement with the investee. Just three things. Pure textbook knowledge, nothing to explain. Okay, because in IFRS 10 I have explained, right? I'll be explaining this. There again I'll be going through this. So when assessing whether control exists, the following should be considered. You see, following should be considered. It's a long list. Long list. All the possible answers are given here. But what you have to do is, this is, I've told you everything from the textbook they have included here. They didn't take out everything. Everything is there. But you have to see the number of marks. It is for 7 marks, right? So maybe 3 points you can give. 3 or 4, right? We'll see in the marking scheme how many points are given for to find whether control exists or not. But here if you see 1, 2, 3, 4, 5, it is not needed. All these 5 factors are not needed. Maybe 2 or 3 is enough. But we'll go through this 5 to understand, right? How control exists. Number 1, size of the entities holding compared to the size of the holding of the other investors. Exactly. You see the size of the holding. You compare it with the other investee. Let's say if you alone you are having 40%, whereas the other shareholders, 20 of them, each of the 20 are holding 2%. Together they are making 40%. 20 of the shareholders holding, each of them are holding 2%, but whereas you alone you are holding 40%. So this shows that you have, your size is bigger compared to them, right? Next, whether the entity can so this thing you can use. Okay, what are the whatever the things from this list, 5 points are there. Don't include all the 5 points in your answer. From this 5 points, 2 or 3, whatever the points you can link with the case study, only those answers you put. If you cannot, then don't put those points. For example, the first one, entity size has been given to you. Aren't we given the size? We have been given the percentage of shareholding, right? So that first point we can use in our answer. Second, whether entity can direct the relevant activities of the industry, such as decisions about operations, capital expenditure, appointment, remuneration of key personnel. Yes. Whether they have the control, whether they can have a say over the activities of the investee, the investor. What are they? Decisions about operations, capital expenditure, how much to invest, investing decisions and all, and also whether they have the power to appoint and to decide the remuneration of the key personnel, like chief executive, all those things, right? So if we have been given any piece of information regarding this piece of information from the case study, you can use the second point also, otherwise no need. Third, how dispersed the other shareholdings are. Dispersed, spread. Fourth, potential voting rights, okay, such as those arising from convertible instruments or options held by entity or by other entity. For example, sometimes you might be given convertible instruments. Example, debt, you have the right, you have the option to convert it into ordinary shares, maybe after 4 years, after 5 years, something like that. Convertible instruments or options held by the entity or by other entities. Okay, the reason is convertible instruments because when your debt is converted to shares, you are having a power over there. You are getting the control of that company. Getting the control of that company through shares, having ordinary shares means your voting rights, you will definitely have a voting right, right? That's why. So if something has been mentioned about this, we'll see. Then include, otherwise don't include. Last, where the investors are related parties of one another. This piece of information has been given to us about related parties. So this we can use. Okay. Whether they're related parties of one another or not, or if they have close business relationships. Right. So if it is, then there's a control. Because if it's a control, yeah, because our question is whether control, the company has the control over night or not. That was the question, right? Now, till this much it was knowledge. Now we are linking into the case study. So we start by discussing this. Okay. This one. Holding is less than 50%. We know that, no? 49.9. Meaning Ashanti will not have a controlling holding in the voting shares of night. What does it mean? Please write the meaning also next to it. I'm not highlighting it in everything, but we'll just read it. They will not have a controlling holding. Definitely, they will not have a control because less than 50% in the voting shares of night. However, a 49.9% holding is very close to a majority shareholding. Yes. Next, one of the investor will have a holding of greater than 20%. Okay, which suggests significant influence. So this might place doubt on the ability of Ashanti to control night. Right? However, IFRS 10 states that it is possible to control an entity when another investor has significant influence. So you can control if another if another investor has a significant influence. So whilst the other shareholders could vote together as a block, I told you, you alone having 40% shareholders versus 20 shareholders each having 2% shareholders. Together, the combined they are having 40%, right? As a block. So other shareholders could vote together as a block and therefore have the controlling vote. This is unlikely. Unlikely this is that they could have a controlling vote together. Why? Why is that? Three reasons. They came up with three reasons. Okay, and this answers you will not get in the textbook. So don't go and search in the textbook. By the way, everything is not from the textbook. There's a reason. That's why people fail ACCA. Lack of knowledge, lack of practical knowledge, and lack of thinking uh, outside the box. You have to come up with the points. These are not textbook knowledge. So don't, if you search this answer in the textbook, you will not. First part, yes, you will get this 5 points and all, but not this ones. Not the three bullet points. This bullet points are from the answer. From the case study, you have to relate to the case study. From the case study, you are getting these points. Nowhere in the textbook it is mentioned. Okay. First, how you can use this 5 points. Okay, from these 5 points, you can see. Number one, shareholders are relatively dispersed. If shareholders are relatively dispersed, means it is widely spread. Many shareholders are there, but each having very small amount of shareholding power. Let's say 100 shareholders having 1%. No one has the control. Whereas one shareholder having 50 or 60%, he alone has the control. It's like that. We'll see. It is given in the case study. The shareholders are relatively dispersed. Okay. Just go through this. I'm sorry, part B, no? So they told remaining this one is held by 11 shareholders. So you can understand how widely it is spread. One has 21, one has 80%. Two shareholders, okay? Oh, wait a minute, just 21 and 8. Let me calculate. Just give me. Yes. So 49.9 is from Ashanti, 21 is one shareholder, 8 is another shareholder, and remaining 21.1% is in the hands of 11 shareholders. So you can divide by 11 shareholders, right? It is widely dispersed. Therefore, together they cannot have a block because together all the 11 shareholders they have 21.1%. Okay. Second, why control vote is unlikely. Other investors do not have a close relationship with one another. Do they have? Do not have a close relationship with one another. This also from the case study. Let me take you through the case study. I know it's wasting a little bit time, me going up and down, but it is needed for you to have clear understanding, right? If you see here, mm, just you see the original founders are not related. And here also, if you see remote relationship to one another, investor does not have close relationship with one another. So this two line says that they do not have. Can you see how they are picking points from case study? But they are not writing exactly copy paste from the case study. They are writing in their own words, do not have close relationship with one another. That's it. Last point. Based on the best practice. Sorry, based on, I'm sorry. Based on the past practice, not best practice. Okay, past practice. What happened in the past? It is likely that at least one of the other investors will not attend the AGM. At least, likely. At least one of the other investors will not attend AGM, thus giving Ashanti the majority of the voting rights. You see, so because other shareholders, at least one of them will not attend, that means majority of the voting right goes to whom? Ashanti. It is like in the past. This also we'll see from the case study, because I want to show you that everything they say is linked with the case study, nothing from their side or neither from the knowledge. Okay, I'm sure you understood how I have linked the link to the first 2 points. Okay, the first three, the last one. Here you can see there has not been complete owner representation of the at the last three annual general meeting of night. You see, no complete owner representation in the last three annual general meeting. Did they write about last three general meeting? No, they told based on the past practices. You see the words, not copy pasting exactly as it is in the case study. You are writing in your own words. Okay, building sentences. So, and Ashanti will have the ability to appoint four of the six members. So he has he he has that ability that he can appoint 4 out of 6, right, of the board. So this is the third point what they have told, that at least one of them will not attend. That's why it is not complete. No owner representation. The founder owners, there were two owners, at least one of them might not attend. That's why it's not complete. There were two, one was having 21%, the other one was having 8% shareholder. At least one of them will not attend AGM, because in the past 3 years it was not so. So this gives Ashanti the majority of the voting right. What happens next? You see, slowly you are coming towards the conclusion. So Ashanti controls the board of director. Hence, you can conclude that who controls the board of director? Ashanti. Ashanti. Because we saw 4 out of 6, he only appoints. So thus enabling it to make key operating. So even this, because they control the board of directors, means even the key operating decisions he can make. Enabling it to make key operating decisions that affect the profit and the returns of night. Okay. All these things considered, it would seem that Ashanti will control. You see how the conclusion changed from beginning to now. When if you were basing your decision just on that 50%, that it was 49.9%, there was no control, you would have totally gone wrong. But now you see, towards the end, things change. So don't be very quick to judge based on only one thing. You have to look all this factor. After they have considered, they are concluding Ashanti will control night. Night should therefore be accounted for. So control means what? Subsidiary. Always remember, control means subsidiary, therefore consolidation. Control means subsidiary, therefore consolidate. I'm repeating over and over again, so this is in your brain. Okay, it goes and it fits inside your brain, and you remember it and you never forget it till the day of your exam. Okay, night should therefore be accounted as a subsidiary from the accusation date. They should be taken as a subsidiary. Now we have finished question number 8. Now let us go to the marking scheme. Marking scheme is important. Okay. Yep. So first part was for 6 marks. Okay. This 6 marks, 3 for discussion, 3 for calculation. Next was for 8 marks. Same. 4 calculation, 4 for discussion. Equally it is divided between the two. And for discussion, 1 mark per point. Okay. I have clearly broke down and I show you the number of points to write. Discussion. Okay. If you are not remembering the discussion part, I have to go very in the top and take you here. Let us see. You just see 1, 2. I have circled it also. 1, 2, 3, 4. The points, the discussion, and same here 4 points. Okay. So 1 mark for this, 2 marks for this, 3 marks for this, 4 marks for this. You see, for discussion, and rest all is for calculation. Next, third one. How are you getting the 9 marks? 1 mark is for pro rating. 1 mark to say that 6 months associate, 6 months subsidiary. Another 2 marks for intra-group. That inventory related to intergroup you eliminate in two places. One is in revenue, one is in cost of sales. Therefore, 2 marks. PURP means unrealized profit, okay? 1 mark to find that unrealized profit of 1 million. Okay? You are already deducting it from one place. From cost of sales. No, unrealized profit I think you are taking from both. This depreciation is 2 marks. Okay? Depreciation. Sale to spice. Sale to spice, 2 marks for narrative, 1 mark is only for adjustment. Narrative means you're explaining what are you doing. That it should not be recognized as a revenue and all those things. Right? Next, part B, 7 marks. How are you getting 7 marks? 1 mark per point. So you can start with the definition of control, then you can talk about the factor to consider whether you are controlling, then conclusion 1 mark, then you can talk about why the controlling vote is unlikely in this condition. The 3 bullet points you can link to the case study and explain. Okay. So with that, I finished question number 8 and what else? So see you in question number 9. Till then, take care, bye bye, and see you.